day, all. Ira Epstein of Linn and Associates with your metals market wrap-up, and this is the weekend edition for January 10th, and we are now 2020, and the time just right after 5:20 p.m. Central Time. What a week. Missiles flying, questions going on, what was going to happen, were we going into all-out war? Well, as it turns out, we didn't go into all-out war. The president, our president, stepped back from the brink, and as it turns out, no damage done, no casualties that we're hearing of, yet the Iranians are saying they did a lot of damage. Okay, that's their show of face, we have ours. I don't know what really happened, and you don't either. If you think you do, congratulations, but we rarely find out the real facts. What we do know is Nancy Pelosi has said she's going to deliver the impeachment articles this coming week. That opens the door for the hearings to take place as we get right into the February caucuses and so on. That should be interesting. And I think it's pretty much a conclusion by most Americans that it's going to end up very partisan in the Senate, and the president will probably not be impeached. The second phase is on Wednesday, we're going to get possibly the same day that Ms. Pelosi wants to deliver the articles. That would be something, take away the president's fanfare of signing the Chinese deal. I think we'd know if she did it on that day, not in the best of taste. But the reality is the Chinese are coming, and they're coming to sign a deal. The president's going to make a very big deal out of it. The market knows it. We had ADP numbers come out. The market saw that, and the stock market still backed off, and the numbers were not as good as even the estimates. And now we're starting to see that, just how many jobs can we keep adding? The important thing is we're not getting wage inflation, and that's what I look at. Then you can go into the mix as to where you're at in the jobs. There's a thing called U6 that people look at, and that they look to see marginal workers, those that want to work, are they able to work, and so on and so forth. The point I'm getting to is that if you look at the gold market, still up today. Let's go to the weekly charts. For the week, let's start with the monthly actually, and we only show one monthly. For the month, and you're only at January 10th, you're still up $37. Any way you want to cut it, that's a pretty good rally in the first 10 days of the month. This is also one of the highest closes gold has had. So that's impressive. Where did the market stop? Right at the upper Bollinger Band. I'd be very nervous about that. This is a different high than right here. And the reason, right here, you have total sideways action. When you first break out of markets, be it to the upside or the downside, it is not typical. It is very typical. You get overbought, oversold, and the market doesn't look back if the breakout's going to hold. Now, you've been doing this before. You've hit the upper Bollinger Band, and in the past, you failed each time. So you're always looking, what's the market going to do? Well, this time you had 2 months over it. That's different right away. You had not done that all these months back. This goes to 2016. So if that's not a big enough sample, I'll let you go find one. I can tell you when you break out to the downside here, it's important, and those are over months. Market continued, adding. Now, eventually what happens, and that's where I'm taking you, you're going to get back under a Bollinger Band, because you only stay over the black line 5% of the time. And then you're playing with it again. This is your next retest of it at a higher level. So the market is doing one thing. It's making higher lows, higher highs. Second thing on a monthly chart, you had a bullish crossover. You don't get these a lot. This is where the 18-month moving average got over the 100-month. That's impressive to me. Big support zone. Doesn't mean it has to be retested. From where you're at, it's $200 lower. On the weekly chart by itself, we were up $7, and this is the highest close in a very long period of time, years. So the market's still holding on to gains. We can get corrections, but it's holding on to the gains. And you've broken out of this pattern where the market was drifting, and then it started up, and the question was, could you get through here and hold? And the market did that. What else? In the pattern, you had, and still have, higher lows, higher highs, bullish. The correction I was looking for took place. So on my gold report that I did, I don't know, 8 weeks ago, 7 weeks ago, and I just did a new one that I hadn't done since then, I was looking for this drift in the market, and then I'm looking for the rally. That was the earlier report. And I haven't changed my opinion, by the way. I wouldn't be surprised you get breaks in this market, and it's well supported. When I look at where we're at in the moving averages, we're over the 18-week average, and that number's in the 1493 level. I'm not saying you have to go back there, but you are over the upper Bollinger Band, and that's hard to hold on. That's the point. Take a look on this chart. It's rare that you just stay over it other than coming out of these sideways actions. Now, could this be defined as one of those sideways actions? It does fit in. So you're over it. I'm guessing, the word is guessing, that the pros are still going to be buyers. I wouldn't want to see 1472.60 taken out. And in between current prices and that number is where I think the pros are looking pretty hard on the longer term charts. The slow stochastics, they flattened out. So the move off the missile attacks and so on, we know what happened there. Didn't hold the better part of the week's range. Market gave up on some of the momentum, but has not turned down. It sort of stalled out on you. When you come to GLD, the popular ETF, it, like the futures market, had the higher lows, higher highs. Now, the last time we hit Bollinger Bands was up here. We've come up, cleared that area, and we stayed over it for the week. Again, in between that Bollinger Band and the 18-week average, wouldn't surprise me if the pros are looking to buy. I see no sell signals is the important thing. The miners, while the daily charts look ugly on the miners, the weekly doesn't. The weekly has still got higher lows, higher highs. The market went to the Bollinger Band. That is often where you get the resistance wall. And that's what it hit. And it wasn't able to follow through into these highs. Momentum, which had been pointing up, sort of stalled out too. You can see that right through here. Is there anything but bearish on the chart? There is not. I look for the pros to support the market at the 2750 area with resistance 2910, that upper band. The gold-silver ratio. When I'm looking at the weekly ratio, the key is now, if you're going to think silver's going to gain on gold, we need to see that ratio get back under this 84.80 level. Until that occurs, the silver is losing to the gold. It's not as strong on the weekly basis of the ratio. When we come to silver, you got right up to the resistance point. Take a look. Here's the upper band. Didn't quite hit it. You hit it this week. Again, one of the things I teach is if you have a wide enough band, and I call that one wide enough, the first challenge of it often is like hitting a wall. And that's what happened. The pros taking some money. And on the pullback, I'll be looking to see, can we establish a pattern of higher lows, higher highs? That's important to me to see. In the copper, I'm still in the bull camp. The market's got a pretty conclusive pattern of higher lows, higher highs. The first resistance got over. The upper Bollinger Band fell right back. Now the market's battleground is right here, the 100-week average. But until it takes out 175.95, it's still in the bull camp on this chart. Platinum market, do you need me to tell you where the current resistance is? No, you shouldn't. You've got the higher lows, higher highs. If it's going to run a potential target, not one it has to hit, but potential, upper Bollinger Band. Did not hit it last week, hit it this week, and you know what I'm going to tell you? That was last week. The first challenge of it after a wide band is often an area the market loses footing. You need narrower bands. The narrow one creates the breakout that often holds. These type of bands don't. They're too wide in my opinion. The palladium market is a whole different world. It is a market that is in short supply. It's getting bids. It's up $117 for the week. It's a market that, because we think trade deals happening, U.S. USMCA, U.S.-Mexico, Canada, that deal coming up. Went to the brink of war, didn't do anything. What did it do to that? This is not a war metal. This is one looking at, hey, China's going to be needing more cars. Europe might be able to do more trade. Demand and scarcity of the metal. You're running into a deficit each year of production versus usage. This has got this market on the run. You do realize on the weekly chart that practically no one, because this is an all-time high, no one that is short is in a profit zone here. And there are people picking tops all along these zones. It's not the thing to be doing. I can understand if you're long and you come out against a Bollinger Band and you're getting those reactions. Now you're over it. I hope to look back and say, hey, you were over it to get a correction. That's totally normal. But there's nothing long-term bearish. You have held this since last August, and you haven't been under that 18-week average since then. There's nothing bearish on that chart. As I said, my special report on the gold is out, and I covered for you in detail price counts, where I think the market may ultimately go. And no, we have not hit that number yet. Number two, I cover for you the seasonals, and I show the strength that the market gets typically on the 30, the 15, and the 5-year charts from right now, carrying you practically into the March period. I show you the weekly charts, the daily charts, give you an idea of what I'm seeing for the April contract. How do you see it? Go to our website, www.iraepstein.com, under the word research. It's dated 1/8/10, so I recorded it 2 days ago. It will leave our site on Tuesday. Hope you enjoyed. If you have any questions, call us. We do call back. If you leave a message, we'll get to you. I'm Ira Epstein. You have a great weekend, and I'll see you Monday.